All right, guys, back to work tonight. It's Tuesday evening. It's December the 7th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Wednesday's trading session. I got a great video in store for you guys tonight. Charts are already in the background, as you can see. Got the oil, got the Nasdaq, we got the S&P ready for tomorrow. Glad to see you are here, tuned in right along with us. Got a bunch of good trades setting up for Wednesday. We saw some big moves today. Anytime we see big moves in one day, we're thinking ranges, which means we're thinking failures, reversals, breakouts. I have a ton of great reliable trades I'm tracking for tomorrow. I'm going to go over all my favorite trades in tonight's video. I'll also make sure to kind of keep you out of trouble tomorrow. Make sure you finish the day tomorrow in the green, whether you're trading with us in the trade room or you're trading on your own. Before we jump into the video tonight, though, as always, make sure you subscribe to our YouTube channel. I publish this video every evening during the week. I don't want you to miss tomorrow night's video, so make sure you subscribe to our YouTube channel. If you have any questions for me, drop those questions in the comments section. I'd love to answer any questions, so don't be shy in the comment section below. And if you guys enjoyed this video as much as I enjoy making it, hit that like button for me. Appreciate you all tuning in and spending some time tonight on this nightly newsletter. But speaking of newsletter, the time is ticking. Let's get this thing ready for Wednesday. What do we have here going on the charts here? S&P, Nasdaq, both making huge moves. Biggest one-day move since March, I think they said this year, right? So huge short squeeze after last week's big down day. We definitely were expecting to see some buyers buying pullbacks today. Maybe not expecting to see as dramatic of a move, but as I mentioned though earlier, anytime we see big moves like we saw today, we are anticipating ranges here for tomorrow. Now, over on the Eminis right now, I'll tell you, the S&P and the Nasdaq are really both at kind of major turning points right now. Again, I would anticipate some ranges tomorrow, so we'll talk about range-bound strategy for tomorrow. But at this point, and you'll see what I'm talking about here in a moment once we dive deeper into these charts here right now. But both the Nasdaq and the S&P, yeah, we're all bullish, but we're kind of at the major, we're at major turning points, right? So I've got my eyes on some shorts going back down. I've also got my eyes on some range-bound strategy. I've also got my eyes on some continuations going higher here. So whether we go up, down, or sideways, I got you covered on the S&P and the Nasdaq. Now the oil might be a little bit of a sign of things to come on the S&P and the Nasdaq. You'll notice the oil had that run up, but now has begun to roll over. We have a lot of overhead resistance levels here on the oil. I would love to get some shorts, possibly back down to that $70 a barrel area. We do have an open loop on the oil. We'll talk about what that means here in a moment, which means the buyers do still have potential, but we'll have to be careful with the buy side right now with all of that overhead resistance. I'll talk about how to convince myself to get long and what it will take to get me back on the buy side on the oil futures, and we'll talk about that stuff tonight in this video. Now, before we jump into the charts, though, and get this party going tonight, let's make sure we take a look at the schedule for tomorrow. Tomorrow, we do have some major news on the schedule. It's not the biggest news of the week this week, but, as I mentioned last night on the newsletter, kind of a slow news week, second week of the month. We're not going to hear of any Fed speakers, and we're kind of coming out of the reaction to last Friday's non-farm payroll. Tomorrow, we get the JOLTS report at 10 o'clock, and, of course, we got the oil report at 10:30 Eastern time. These are obviously pretty important, right? The JOLTS report will apply to pretty much everything. The oil report tomorrow, that petroleum status report, the weekly inventory report, of course, will apply to crude oil. Now, remember, when it comes to that oil report at 10:30 Eastern time, I like to give it about a 15-minute buffer. So 10:15 before, and then usually it's about 10 minutes after, right? So let's say 10:40 right after that news comes out, right? So I usually will sit on hands at 10:15, give it a few minutes ahead of that news. I know a 5-minute buffer is typical, but usually oil, we start seeing a bunch of speculation ahead of that news report at 10:30. I usually stop trading oil around 10:15, and then once the news comes out, we'll get back after it. Remember, we're not trading the actual news, right? We're trading the reaction to the news here. So just be aware of that. Just try to be careful leading into that news report. We oftentimes see quite a bit of, kind of gamblers and speculators come in, and it makes price action setups a lot less reliable. The JOLTS report, again, should apply to pretty much all of these markets that we're talking about here tonight. So as you can see, those are pretty much the only two major news events we have here to worry about for tomorrow. The big one is that oil report, of course, if you're an oil trader. That will impact oil quite a bit. Thursday got some minor stuff. The big news is arguably going to be on Friday, so make sure you save some of that ammunition to use on Friday morning's trading session. I should also, too, remind you that we are watching rollover right now. I believe rollover on the Emini S&P and the Nasdaq will be on Wednesday evening into Thursday. But, you always want to kind of keep an eye on that. Right now, we are trading on the 1221 contract on the Emini S&P and Nasdaq. Once you see the 0322 contract start to have more volume than the December 21 contract, that'll be your clue to make the move over to that March 22 contract. Again, right now we are on the 1221, but in the next 24 hours here, we will be watching for that sign of rollover to the 322 contract. And remember, guys, we're not talking about expiration. We're not talking about the end of that contract. We're talking about volume rollover. So, even if you miss a day on this, it's not the end of the world. It's not that big of a deal, right? But be on the lookout, though, for that rollover here, probably tomorrow night into Thursday. And then speaking of Thursday, I hate to say it, but Thursday evening's newsletter is the final newsletter of the year 2021. Now, of course, this time of the year, I always sort of take some time off, refresh, rest up, and get refocused for January because, of course, the party starts back up again early in the month of January. So just please be aware of that. I hate to leave you guys hanging. It's always a bit difficult to take some breaks at the end of the year, but I do like to take those last couple weeks off to kind of rest up, refresh, get refocused, and get ready for the new year in January. So final newsletter of the year, 2021. I can't believe it's been a great year, but final newsletter will be on Thursday evening, and we'll come back that Monday. I believe it's January the 3rd. And don't forget, guys, we're going to plan everything tonight. We're going to trade this stuff together tomorrow in our trade room. If you want to come out and trade this stuff every morning with us at the opening bell, we have a daily trade room where you can look at my shoulder, follow along, right, and find all the best setups right along with me. I'll put all the membership links you guys need right down the description of this YouTube video. If you're on the website right now, there'll be a big button for you right below the video tonight on the website. So keep that in mind for tomorrow. Again, we are watching that 10 o'clock and 10:30 news. Keep an eye on rollover on the E-mini S&P and the Nasdaq, and we'll finish up the year, not tomorrow night obviously, but on Thursday night, right on the Thursday edition of our nightly newsletter. Let's get back to our charts here. S&P, Nasdaq, oil, everything's all set to go here. The S&P and the Nasdaq are both pretty bullish right now. Oil is definitely turned to a bear market. Let's start first tonight, though, with the S&P. I mentioned in the introduction that the S&P is definitely bullish, but we're kind of at a major turning point right now on this chart. And the reason why I say that is because you can definitely see, right, market makes this strong jump up into a trading range, strong jump up into a trading range. And of course, we talked about this last night, right? Anytime we see a bull market into a range, what do? We find levels of support below the range. We look for seller failures to go back up into that trading range right now. At this point, the buyers have retested that high. They're probably trying to reach that pendulum swing, but we're really in a tough spot right now. It's difficult to want to be a buyer up here. Yeah, I can definitely look to be a seller right off this high with with the right setup, I can certainly anticipate a range for tomorrow because, again, anytime we see such a big move in one session, the following day is oftentimes going to be sideways. So we do anticipate that range. And if the market can keep going higher here, we have a number of breakout patterns that we can look for to trade the continuation for tomorrow. So there's plenty of ways to trade this. We can buy it, we can sell it, we can wait for that range. It really kind of all depends on kind of what happens here in the short term. The most important thing right now, though, is the buyers have pretty much completed, what their mission was, right? They got that strong run up, they get that deep pullback, they retest the high. Now what? Now what? Do we come back down, take out these lows? Do we keep on running, complete the pendulum swing? Or do we, what is kind of expected here, do we start to drift off and go sideways to let this market kind of get a break, right? Get a bit of a breather here after such a big move higher here today. So I'm sure everyone's wondering, how do I short a market like this, right? How on earth would I sell a market that is this bullish? Well, first of all, you have to be at a major turning point, and we definitely are, right? So we're now right back at that high. The moving average has not broken above that high, which, if you're a member of our free trading class, that means we do not have acceptance of this move going higher yet. A good rule of thumb is get that moving average up above that high, and that will generally be enough to give you the to give you the proof you need. This market wants to keep going higher. How do I sell a market like this to take the market back lower again? I'd have to really be patient and wait for these buyers to try a couple times. What I'll do is I'll wait for the 1, I'll wait for the 2, and one of my favorite entries on a reversal like this is to look for the 2-try rule, let the buyers try twice, and either get a trap off that high, or one of my favorite ways to do it is to draw a trend line off that low, bring it up around that high, and man, oh man, one of my favorite reversal trades. Again, it's called a 2-try failure, but you want to put a trap in or some sort of, hidden channel because, you always want to sell at an area of resistance. Now, don't forget, if we can get that big turn coming over, now what I can do is, if I kind of back this up a little bit, what I can do here now is I can now find that new channel, right? So find the channel there, sell that, again, 2-try failure, then mark up a new channel off that low, and then look for that short off of that, either maybe a trap, get that moving average coming over there, right? Trap, failure pattern, pullback combination. And again, the goal will be to take out that low over there, right? So we get a bunch of ways to do this, right? A 2-try failure off the high, the bull trap, the buyer failure, right? Off the moving average. And of course, that pullback, combination as we try to go lower. Once we get back down here, can I buy this? Right? Can I buy down here? This is where we're going to have to be a little bit careful as the market pulls back. For example, right? A lot of times the market goes up and ends up pulling back here. You're going to see some sort of falling resistance trend line. So you want to really kind of watch out and see if we have any falling resistance. What would be a very common type of pullback once we take out that low and knowing there's a range, and of course ranges act like magnets, one very common scenario here would be to get that big drop off the high. Again, imagine now there is a big trend line coming down, and then because you've got all of that bearish momentum, you use the same 2-try failure pattern to buy it right back up, but you make sure that you're using that trend line, right, to basically to your advantage, right? So imagine that trend line coming down. We still want to give remember, this will be a bear bias at that point. It'd be a bear momentum move at that point. So let those bears try a couple times, right? Find that trend line coming down and either use that trend line or find a support trend line. But, kind of that's the way that I want to trade this thing as it rolls over. I can look to sell it off the high, right? Again, with that 2-try failure. And then as we roll over, watch for that trend line coming down and look for that. Again, it's kind of a variation, right, of that 2-try failure pattern to go back up into that trading range. Now, don't you think if the market was to roll over like this, right, don't you think this could easily turn into a full-blown reversal? Yeah, how would that work? Well, let's say, for example, the market goes up 1, 2, comes crashing back down here. And now let's say the bears come in and they hold that pullback and we get a 1, 2, 3 breakout or 1, 2, 3 reversal. If that happens, I can now mark up that low. I can mark up that high. And you know me, I always want that first test, right? I want that short off the high with the first test off the high. Now, tonight, I'm not going to go into all the details of the specific entry techniques I'm going to use. I've talked about things like traps and failures and pullback combinations. You know, I have hundreds of examples of how we apply those price action entries. It's all included in our free quick start class. So what I'll do is I'll put a little link up here for you in the upper right-hand corner. You got to grab that course because inside that free quick start course, I'll give you the same roadmap that I follow every day in our trade room that helps me find the best trades each day. But most importantly, you'll see hundreds of examples of how we apply these actual setups to our favorite futures markets. So again, I can sell it off the high. Once they get down to that low, I can use that 1, 2 to buy it back up. And if they roll over and hold, then it's all about finding that new channel, right? That new channel and shorting off that high. Now, there are a couple other reversal patterns that we'll talk about later on in this video. So make sure you stick around on that because we definitely have a reversal on oil setting up right now and maybe on the Nasdaq here for tomorrow as well. Obviously, we'll have to wait and see what we get here in the overnight. Now, probably one of the most difficult parts about this is going to be if we start to drift off and go into a trading range. What do we do if we start going sideways up here into a range? We have to find some level of support underneath that trading range. And here's what I'll be looking for. I'm going to mark up a trend line off that high. I'm going to bring it down off that low. And that's going to make for a really nice area of support for us right here tomorrow. So you want to think about if we start to go sideways, and it might be here, it might be up here. I don't know. I don't know where that market's going to go sideways yet. But we do know that anytime we see this big of a move in one day, we know we have to anticipate a range. So again, if we end up just kind of treading water up here somewhere and going sideways up here, think about now how we can find a channel off those highs, bring it down off that low. That's going to be a really nice area of support for us. And then all we got to do is, because we know that ranges are magnets, we can wait for that pullback. We can wait for those sellers to come in, right, and try to get short. And then once they do, all their stops, right, are sitting right above that high. Now remember, this is only if we start seeing a new range, right? Everything else will still apply if we don't see that new range or if we get dragged back into the range that we have right now. The key is, again, is you're going to want to go out and find some of those key levels of support. Look to combine that support level with what I call a failure setup, get that nice strong signal candle, right? And we can trade that, again, that seller failure going higher from there. So keep that in mind if we do go sideways and then wait for that base of that breakout pullback to fail for the bears. As we go higher here, I have really 4 different types of breakout patterns that we can use going higher here. I'll cover a couple of them here on the S&P and we'll cover a few more on the Nasdaq and the crude oil. One of my favorite breakout patterns, because we have this range right now, would be a breakout pullback. So imagine this area right now being used not as resistance, but really as an area of support, right? So imagine now we take away that resistance zone, we see a really strong pop up. Anytime we see a strong pop up, that strong high, that high up there basically creates a magnet. And so imagine now the market really punches and runs higher, right? Takes out that pendulum swing and then begins to pull back. We pull back underneath the moving average. We sit right on top of that trading range. The sellers now think this market wants to go back into that range. But remember, anytime we see this much strength in one direction is almost a guarantee S&P, we're going to retest the high. I would like to use this breakout pullback, see if this thing can go up, pull back here for me, give me a chance to trap in some of those bears with a failure into a pullback combination. You'll see a lot of examples of these combination setups, failure, pullback combo. You'll see a bunch of those inside that free quick start class, but that's one of the many ways in which we can trade the breakout, right? Get that strong push up, think about where that prior high is. And then again, we're not simply buying the dip. We're waiting for those sellers to get caught so we can use their stop losses as fuel for the fire. Now, where do we think this market wants to go at that point? Well, what you want to remember is the size of the breakout leg is the size of the measuring leg, right? So we'll know more about that once we get the next leg going higher, right? So watch that breakout leg, and that will tell you kind of where that next target's going to be as we go higher. We do have some major tops up here at this 47, we'll say 17 area. That is the Thanksgiving Day high, which you can imagine is a big, juicy target there for those buyers, right? So 47.17, and then dare I say, right, Santa Claus will be happy, 47.40.5. That's that all-time high again. We'll see if this Santa Claus rally is legit tomorrow, if it wants to keep going higher. What if it does keep going higher? You know, what would be another way that I could trade this thing as it goes? Well, let's say, for example, we punch up, right? We see a shallow pullback and a higher high in price. Yeah, that's an easy money trade. That is a trap setup right there. We call these two-try traps, right? So strong move up, shallow pullback, higher high in price, right? Two-try trap. Buy off that trap low. And remember, if you can find a channel off that high, bring it down to that low, those types of trades are almost bulletproof because you have such a strong momentum move, it's almost a guarantee they're going to go back up and retest that high. So those are some ways, those are two of the four ways I'd like to buy this breakout. I also wouldn't shy away from a short going back into that trading range, right? And we'll see if we get the full-blown reversal here on the S&P right now. Let's keep going. We've got a lot more to cover here tonight on this video. Let's grab some Nasdaq here. The Nasdaq is really very similar to the S&P in the sense that we're definitely bullish, but again, we're really sitting at a major turning point right now. You know, the Nasdaq had a huge day today. Again, biggest day since March this year. Just straight panic buy up into a trading range. And this is why I love spike and channel patterns so much, right? You'll notice First of all, you'll notice the breakout leg of a trading range is used as a symmetrical leg, right? We just talked about that on the S&P, right? The breakout leg can be used as a symmetry leg, and you can see that is very difficult to argue, right? Seeing where the day ended up here today. What is really cool, though, is we basically break out, we go into a trading or into a channel, right, which is basically a spike and channel. And what do spike and channels tell us? They tell us look for the pullback in the base of the channel. That's why in my intermediate video classes here at School of Trade, I talk about how spike and channels are really a top 5 chart pattern because they're so darn accurate. They really are. You know, spike up into a channel, find the base of that channel. So we get this big strong run up. The buyers get a gift this afternoon for that nice deep pullback, and now we retest these highs. This is just like the S&P, right? The buyers have pretty much completed whatever their objective is. At this point, will we go short, back down, take out that low, right? Will that short turn into a reversal, right, and keep on running? Doesn't seem likely at this point, but hey, we're going to keep that on our radar for tomorrow. Will we go sideways into a trading range? If that's the case, we got some ideas how to trade that. Or will we keep going higher? You know, we got some big targets up there, 16,456 level, right? That is not the all-time high, but it's a very big top up there. We have to assume these buyers are going to be hunting for. So what if we go up? What if we go down, right? What if we go sideways here right now? You know, a lot of this will be very similar to the S&P. You know, I can short this thing, but I have to be very patient for those buyers to try once, buyers to try twice. Again, can I find a hidden channel and grab that short? Can I grab that trap, right, off of that high? And then if we do start to see that kind of collapse back lower, can I grab that first test, right? Because we all know by this point, first test is the best test. That trap, that buyer failure, that pullback combination, right? These will be some great trades setting up here for tomorrow, right? So let those buyers come in, let them try a couple times to push it higher, find that, right? Find that channel, grab that short, right? Off that kind of hidden channel high, off that trap high, off that area of resistance, and then watch that new channel, right? Grab that new channel. And you want to jump in on any of the price action setups that we talk about in that free quick start class linked up in the upper right hand corner, right? I'll also put a link for that video course in the description of this YouTube video or right below me tonight on the website. And then again, like I mentioned earlier, right? If we do end up trying and rolling over here, watch out for those bears to come in and hold that pullback. Right? If they can hold that pullback, yeah, see, now we're talking, right? Now we're talking. Now we have that 1, 2, 3 reversal. I can mark up that low. I can mark up that high. And again, I want to short that first test of the high of that channel. Now, where do we think this market may want to go? It's probably going to want to go the size of that kind of drop leg. Right? Whatever that ends up being, right? The size of that leg will probably end up being the size of that kind of follow-up leg. Remember, the first and the third leg are oftentimes very, very symmetrical, and that should put us somewhere back down around this range here, right, from earlier on in the session. Again, just make sure, right? We're not trying to force a reversal here right now. We're waiting for those buyers to struggle with exhaustion, and with the right signal, we can sell it short. At the same time, if we do end up all the way down at these lows, we may see like a range develop somewhere in here, right? Let's say, for example, we go up, right? Market turns there, pulls back. Let's say, for example, we do something like this, right? We roll back down. That'll be that range that we're kind of anticipating here right now. So if that happens, what do you want to do? You want to use that 2 try failure, the 1, the 2. Everyone stops now are sitting right above, right, that high, and you can buy it right back up into that trading range. Remember to keep your eyes open for that trend line coming down and make sure we're trading around that trend line. We don't want to be caught buying right into the overhead resistance. And again, you're going to want to let those bears try twice right there because that momentum will be so strong as it comes rotating off the high of that trading range. A lot like we talked about in the S&P, if the market was to go sideways right now, right? If we were to go sideways up here at some point right here for today, the hard part now is we really want to find a level of support, right? Want to find support down below the range. So what I'll do is I'll go looking left, right? I'll find a trend line there, find a channel right there, right? See if I can get this thing now. Again, see if I can get it to pull back. Remember, anytime we have a range, anytime we have a bull market into a trading range, find levels of support below the range, wait for that price to pull back. Don't try to pick the bottom of that move. That's kind of a foolish game. Wait for those bears to come in and try to get short. And then once they do, once they commit, right? Once you get that nice juicy red candle, and I'll show you more examples of this stuff in that free video class. But once those bears commit, now you know exactly where their pain points are. Combine this thing with the low of a channel, right? And now you've got yourself a recipe for a pretty easy winning trade with what I call a seller failure pattern off a support level underneath that trading range. So again, keep it in mind here if we go sideways. And then also too, don't forget, right? Don't forget, if we do go sideways and the market then kind of spits higher here, you can find that new channel, right? Find that new channel, grab that entry, because of course the first test is always the best test. That's a failure. That right? First test pullback. Where's the market want to go? It wants to complete the pendulum swing. Right? So that's where it wants to go right there. Right? So kind of use that same sequence. We've been talking a lot about this week, obviously. So this is kind of a repeat from last night's newsletter, right? But find that channel, find levels of support below that trading range, find that failure, grab that new channel, grab that first test, and then use that pendulum swing for our target as we go higher. Now, what about if we go higher here? Well, we talked about a breakout pullback. A breakout pullback is not exactly my favorite setup here on this Nasdaq because we don't have a range here right now. So what I'd like to do is maybe get a 1, 2, 3 breakout. Right? Let's say we pull back here right now, right? Moving average comes up, the buyers come in and they blast off the moving average. These are 1, 2, 3 breakouts right now. Again, we're at kind of a major decision point right now on the Nasdaq, right? We get that big move up, they retest the high, they complete the measured move. Now what? Right? Now what? Do we pull back? If we do pull back, can we sell it short? Right? Do we go sideways? If we do go sideways, find the buys below the range. Or again, maybe we keep going higher. And if we keep going higher, one way to do it would be to wait for that pullback, wait for that 1, 2, 3, right? Then what you want to do is mark up that high, mark up that low, drill down to your faster time frame, right? Drill down to your, this is a 4,000 tick chart. Just going to give us the basic idea for tomorrow. Drill down to your faster time frame, right? And find your bear trap. Find your seller failure. These will oftentimes kind of punch up, run higher like this. You can find that channel, right? You can find your trap, your failure, your pullback combination. Again, you'll see a lot of examples of that stuff, right? Trap, failure, pullback combo on the way back up, right? To retest that high. Another breakout pattern that is definitely likely or has potential on this would be a grinder, right? Kind of a grind breakout, right? So it pops up, it starts to grind, it starts to grind, it starts to grind, right? You know what I mean? At that point, mark up that trend line there, find that new channel, because it may not pull back. Again, we kind of have this kind of Santa Claus rally in full swing right now. There's a lot of bulls in this market right now. So if this thing opens up and keeps on grinding, what you want to do is mark those prior swings. At the very minimum, get underneath one of those prior swings here, grab that bear trap, grab that seller failure, that pullback combination. And again, we'll try to go back to that high. Remember, anytime we see a real strong move in one direction, we expect to get a retest of that high. Will it be a trap entry, a failure entry, a pullback entry? We'll have to wait and see if we get there in the price action once we get that pullback. And of course, we can also use that 2-try breakout, right? Same thing we talked about in the S&P, right? So let's say we open up here, we go a few more green candles higher here. We get that shallow pullback, that higher high in price. One of my favorite setups, again, is that trap. You know exactly where the buyers want to go. They want to get up to that, 456, 455 and change up there. And as always, not absolutely required, but if you can find a channel, that channel will definitely not hurt to be used as a key area of support. Now, obviously, there's a lot more that we can do if this market does go higher. I can't cover all the small stuff here in this already very long video. So make sure you come out and join me tomorrow, and we'll find the missing pieces here as well. Again, keep an eye out though for that range, right? Keep an eye out for that range here on the Nasdaq for tomorrow. Very likely here. Now, as you can see on this one, we've already got, as you can see here now, we've already got the oil doing something that the Nasdaq and the S&P may follow suit on here for tomorrow, right? So here we go. We got that nice strong run higher. Right, that nice strong run higher, obviously. Right, we get a bit of a measured move going higher. They take out that 73 high that we talked about in last night's newsletter. Pretty much what happened was strong move up, right? Strong move up into a range. Strong move up into a range. It looks like a range there eventually, right? But really what happened was they completed their measured move, right? The buyers come in, tried once, tried twice, right? There's that channel, like I mentioned before, right? And that short back down again. Now we've got this market rolling over here now. the bears now have jumped off the moving average, which gives those sellers now control of momentum. And the buyers find themselves in a very big predicament, right? Very difficult spot, because now they've got momentum that's turned over the bears. There is a big fat trend line coming down overhead. And, for the most part, you'll notice that breakout pullback, they're underneath that high now. So doesn't look great here right now for the bulls. I will say there's one kind of saving grace here right now for these buyers, and that is the strength of that move. Like I mentioned earlier, there is an open loop up there. And anytime we see an open loop in one direction, anytime we see a strong move like that, we always know there's a good chance they're going to retest the high. I think these buyers, though, I think they took out that big high we talked about in last night's newsletter, and I think they just simply sold it, right? Took the profit and ran. At this point now, I would love to get short, right, on some pullbacks here, right? Take out some of these lows, maybe even get down to that pendulum swing objective on the other side of that range. It's not going to be easy right now to be a buyer. Not only do we have those overhead trend lines in our way, but we also, of course, there's no momentum, right? The buyers have zero momentum right now in the last few hours. So got to really be careful here getting long on this oil. So how would I sell this market? How do we buy it? What's the game plan on this? Well, we got to get either a pullback or a continuation going lower. What I really like here is I like how these little swing highs line up right along with that trend line overhead. So as you can imagine, right, if we can get up top here, we can get that trap, we can get that buyer failure. We've talked a lot about these so far, right? There's your trap, there's your failure, there is your pullback combination. Again, we'll take any of these that meet our rules, right, that we talk about in that video class, right? So trap, buyer failure, right, seller pullback. That's definitely how I'd like to sell this market as it goes higher here. Now, how could I buy this market? Yeah, buying it as it goes higher is not going to be easy. It's not going to be easy here, right? Because we have to basically get control back in the hands of the bulls. Right? The buyers had all that control, right? The buyers are jumping off the moving average. But once those sellers, once they jump off, now the bears, they've got control. So we have to get back above the moving average. We have to get these buyers to hold a pullback and jump. It's as simple as that. I know it's not what you want to hear. There's no magic indicator. There's no amount of divergence that can give me a good signal here to get long on this, because there's just too much. There's too many red flags right now. I could get around that falling resistance, but the reality is once they jump off that moving average, we have to really be careful now before we can be a buyer here. So we got to go back to being a bull market. We have to get above the moving average and the trend line for that matter. We have to get a hold off that moving average, and we got to go. Right? We got to get that 1, 2, 3, basically reversal at this point now. And then once we get that, we can mark up that high, we can mark up that low, we can drill down to our faster time frame, and we can find the entry right off of that low. Now, where would our target be on that next leg higher? Remember, think about that first leg. Right? The first leg is oftentimes symmetrical, right, to that final leg. Every once in a while, when you get a really strong trend, like this one today on the oil, right, the first leg, the second leg, every once in a while, that second leg is symmetrical. I'll tell you, though, that's not going to happen very often. We saw it happen today, though, a couple times, because obviously it was a very, very strong trend, right? But that's kind of what happened today. There was, again, that first leg, there's your second leg, right? And they pretty much came back and said, no, we're going to keep this going. We're going to go big second leg there, right? Where that leg is symmetrical there. Not going to happen very often. It's not going to be very common that's going to happen. It did happen a couple times today, though. So again, bottom line is we kind of know where the market wants to go. I would imagine 74 half up there. I would imagine there's that big low right there at 74, 76. something like that up there, right? That would probably be kind of the next big milestone, right around that 75 round number up there. It's a lot to ask. It's a lot to ask for tomorrow. But hey, it's definitely not unheard of. We're at 71.5 right now, 71 3/4. So it's, less than a $5 move. So it isn't completely unheard of. But again, we have to get these buyers back in control first here before we think about being a buyer here on this. What if the market goes sideways here? Right? What do we do if we go sideways here right now on the oil, right? What if we start to drift off and get dragged back into this range from before? What do we do? Yeah, same thing, right? We find levels of resistance, right? Overhead. We wait for that pop up, because eventually the bears who are unable to keep it going lower, those bears will kind of run out of ammunition, if you will, right? So once they run out of bullets, the buyers will take it higher just by default of not as many sellers. Lot of resistance here up overhead. I'm not a big fan of trying to pick a top on this, right? Like picking a bottom. It can be difficult to get in at the right location. And if you're like me and you take a lot of pride in the fact that you use small stops in your trading, it's not easy trying to pick bottoms and tops and bottoms with small stops out there. What you want to do is you want to wait for those buyers to come in. Let them try, right? Let them try to buy that pullback. Their stops are sitting right below that low. Remember, it's bearish at that point. The range is a magnet. Find a level of resistance. Grab that failure setup that I teach inside that free quick start class and short that sucker back down into that trading range. If the market was to continue running lower, right? If we were to continue running lower here, you want to pay attention to kind of how the market reacts. For example, if we see a strong run down, a shallow pullback, and a trap, right? A shallow pullback and a lower low, that trap high is an easy money trade, right? So if we see this thing just completely fall out of bed, right? Really strong run down, you get that shallow pullback that drives all the bears crazy, that lower low confirms the move, then you can easily grab that trap. If we were to keep kind of grinding, we don't really punch. You know what I mean? We grind down. That's when you want to mark up that channel. Just simply steepen that channel down. Find those prior swings. Try to get above a prior swing with a bull trap, right? The failure, the pullback combination, and we can short back down from there. Any one of those pattern setups will work. Again, if we just keep on kind of grinding as we go here. So really at this point, just a matter of time of figuring out what we're going to get here right now. If the market was going to pull back and just jump and run lower right now, great, right? Mark that new channel. All of that momentum means it's almost a guarantee we retest a low. That would easily be a 1, 2, 3 move. Find that new channel, find your price action entry, take some profit off at that low, and leave a runner for that 70 big round number, right? Pretty easy stuff there on the crude oil. Now, like I mentioned before, big moves today. You got to be on the lookout for some ranges here tomorrow. We'll know more in the next couple hours here, right, as the markets open up in Asia. As always, don't forget, come out and join me every morning at the opening bell in our trade room. I'll put all of the important links you guys need to get registered, to learn more about all the different membership specials. I'll put all those details for you guys in the video description here as well. So grab that link in the video, get registered. I'll see you tomorrow morning. You can register on the website or just simply call me. I'll always be here to help out every step of the process. You can call that toll-free phone number or simply drop a question in the comments section below. Guys and gals, hope you learned a bunch here tonight. Thanks for tuning in late with me here this evening. I'll see you guys tomorrow morning at the opening bell. If not, you better come back and see me tomorrow night on Wednesday's edition of our nightly newsletter. Now get some rest. I'll see you guys tomorrow morning at the open. If not, same time, same place tomorrow evening. My name is Joseph. Thanks for tuning in again. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.